morning, guys. Another Sunday video coming at you, this time for April 17th. Yes, April 17th and the week ahead. FOMO market's back. Craziness is back. Black Swans are back. Momentum's back. Chase everything is back. 2021 is back for a week anyway. So we'll see what happens. But there's a couple things to think about here. First off, not everything is going to be the next CXAI, right? And I use XYZ or CXAI, whatever the ticker is, right? And so a lot of people always think about this is going to be the next XYZ, right? When CXAI was going, who thought it was going to go Black Swan? No one. Yes, it had a crazy move, and yes, probably anticipated it going to 10 on that squeeze. Mentioned that ahead of time at that 450 to 5 to 6 move. And that made sense at the time with the volume and all that kind of stuff. But who's thinking it's going to go to 69 the next day? Probably not anyone, right? And so, these kind of things happen. They make people excited, and then it comes back down to 30, and they think it's going to be the next HKD, and it's going to go to 1,000, and then they buy at 30, it goes to 20, and then goes to 13. It's just a recipe for lots and lots of disasters after, one of these Black Swans happen. And what I mean by that is now, a stock that goes from 4 to 6 becomes an opportunity, right? Before 4 to 6 was like, whoa, this is moving way too much, too fast, went too far. It's probably going to be a nice fade. Now it's like, hey, it's only moved 4 to 6. I might as well chase it, because it could go to 10 or 15 because it makes sense right now. It makes sense that that could happen. So then you have stuff like SAI, pre-market, where it ramps up, kind of fades into VWAP, ramps up, goes. There's not a ton of volume, but at $6, it just goes nuts. And it goes 6 to 7. Most of traders get on the long side, in my opinion. It was a relatively hard to borrow. There was definitely stock to borrow, but it wasn't like an easy to borrow, load up and go crazy on the short side type of name. So to me, that means there was a lot of longs chasing it 6 to 7, thinking that it's going to go to the moon, and then it slams down, comes back, fails to follow through a few times, and really gives that clean opportunity that we're looking for. That's an example of people that are reacting first. FOMO, afraid to miss that next opportunity. So, yeah, chasing could work, but what does that mean for a short seller? Hands off, right? One of the things that I want to talk about today is when you think about shorting it, wait 5 or 10 minutes. Wait for the next 1 or 2 stuffs, and you'd be surprised that maybe you'd see that it's not a good trade. When I say that, what comes to mind right away is that MRAI. And so it was ramping up late day on Friday. I think it was around 250s or so, kind of ramped into VWAP, slammed back down, and I said, hands up, don't fall for one candle down. And what did it do? Swiped back up through VWAP, 270s, 280s, and then the trade came. So had you taken that moment, 5 or 10 minutes, hands off, don't chase that one candle. Let's see what it does. Yeah, maybe you miss it. Maybe it goes 230s, 220s, 2s, 190s, right? Maybe. And maybe you end up missing that. However, you're not going to get chopped up if it doesn't fade right at that moment. And if it does stay heavy, you can always scale into that trade. So just be cautious, having that fear of not missing out on the upside, but that fear of missing out on the downside. And I think that's what happened with CXAI. And then we had a couple others, and CXAI, PTPI, and CNSP on Friday. Now, I really want to focus on, did I score on the upside on those? No. I sold CXAI way too soon. I was actually long, as you guys saw. I think it was 130s, 140s. I made it to like I want to say 260s or so, and then obviously it went, did what it did. PTPI, another 1 million low floater, and one of those names that it's very much controlled. Probably somebody comes in, absorbs the float, let shorts have at it, swipes up, let shorts have at it, swipes up, let shorts have at it, and then makes them pay, right? And we could see at 550 they were holding that line all day, at which point it starts to fail to follow through. And we have a nice unwind trade, likely leaving before the weekend, and taking that big share scalp off of all the people that wanted the next XYZ, the next CXAI, because that's what they can do right now. Right now, everybody is chasing first, asking questions later. So what does that do to your risk? Does it open you up if you don't know what you're trading? ADAI, right? We knew it was effective. We knew that it was literally any moment that there could be a race. Now, some people were trading that long. And like I said, just because they're going to offer ASAP does not mean that it's a short by any means. And that's probably why it ran. But if you're trading long, you have to admit to yourself, or at least know, that it is reckless, because it's tick tock, tick tock, tick tock. It's the moment that they raise. I mean, you're not getting out. Good luck, right? So that is the risk, trading something that you know that there is probably a 99% likelihood that they raise any minute. And so, of course, we had a really nice trade. Why was I short ADAI? The reason was because of the failed follow-through setup. Yes, it's on my radar, and yes, I'm super, super excited about the potential of a raise, but am I shorting it anticipating a raise? No, I'm shorting it because there's a high likelihood of a raise, but more importantly, the setup was there. Failed follow-through setup. The people that ignore the setup and say, hey, these people need to raise, this is a no-brainer short. Yes, it was. But guess what? They broke even, right? Because that was obvious at 350 and 4. And then it ramped up to 8 and it came back to 4. So congratulations, they broke even. But all that I want to see is failed follow-through setup. I want to see that technically the stock agrees. I don't want to fight something because the fundamentals suggest something else. Because in this market, none of that matters until it matters. IMPX, maybe they're hammering an ATM. Who knows? But it doesn't matter if CXAI goes to the moon, right? So 30 to 60 cents to $1, yeah, that's a crazy move. But it also went to what, 160s, 180s, something like that. So it was fantastic trade opportunity, but you've got to understand technicals, volume, and all that kind of stuff over fundamentals at this point. As far as being short, heavy conviction short. And remember, just know what you're up against if you're going to be trading them long. What else did I have? Let's see. We talked about CXAI, about, no one called it. Okay, so I got long 130, 140, 150, sold, 220, 260, to whatever. Did I call that? Did I think that it was going to go to 20s, 30s, 50s, 60s? Absolutely not. So every time these market cycles kick in, everybody has that next CXAI idea. But no one had CXAI to begin with. So be cautious chasing, your desire to nail the next one, because that's going to take you off course. You're going to, end up in something like IDAI offering. MRAI did an offering after hours, and there's a lot of stuff that, you're going to walk into and it's just going to lose all your money. So be cautious. Watch your sizes. Swipe risk is kind of similar to the chase risk, right? So if you're starting into a position, you want to leave yourself room in case, it swipes up. We talk about a lot. Same deal with chase. You want to make sure that you're okay with it slamming right back down to that level. Other than that, yes, as you've seen, I've been doing a lot more swings. So I'm trying to adjust with the market. It's been a good market for the IRA. One thing that I'm doing is just I'm not going crazy aggressive. I'm trying to spread the wealth over 7, 8, 9, 10 different names that kind of fit the momentum, what people are chasing right now, what the market's rewarding right now. A lot of those de-SPAC charts, ones that were SPACs, they did their high redemption, they tanked down, they are the new company, they got their new symbol, and they have a smaller float. They trap, ramp them up, and then they dilute. That's what's been happening right now. And you've got that with SMX and NI or whatever that one was, in a bunch of the other ones, CXAI, obviously. So that is what the market's doing. So anytime I see a chart that's 10 down to 50 cents or $2, something like that trades relatively thin, if that volume starts churning, those are the days that you want to pay attention, and especially if it gets trappy. One last thing about all of this stuff right now is, when the market's like this, everybody chases and holds because they want the next CXAI. So as a short seller, you need to, like we were talking about before, just pause, wait 5-10 minutes. A lot of times you'll be proven wrong, right? A lot of times in this market, it's the sellers are the short sellers, right? And when it stops going down and it starts to bounce off the same level of support and starts to reverse, number one, it's going to go extremely fast. Number two, there's probably not going to be any sellers. And number three, there's just going to be panic covers, which send it into circuits like CNSP on Friday. Now, I was going to go over those three names. T-shirt time was Sebastian0910. So Sebastian, just email me, webmaster@investorsunderground.com. You've got the T-shirt for last week's scan. As always, there's not a lot of competition right now. There's only like 15 comments last week compared to like 40 or 50. So if you leave a comment, you have a higher chance right now to getting a shirt if you haven't yet, because more people are outside or they just don't care to comment. But last but not least, video topics, then I'll go back to what I was going to talk about. So video topics, originally what I was thinking about talking about was relax. The flavor of the day is the least edge, right? When the tape starts to flip, you start to see, 60K bid, 60K offer, and it just keeps on flipping back and forth, back and forth. That's the stuff you want to, is there really an edge here, or am I just trading this because I feel like I want to nail this trade? And a lot of times, and I know it's bad to say, but a lot of times that is the case. You feel like you got to nail it. You feel like you have to trade it. But if you actually look at all the other things that were moving, they were a lot easier. Again, I didn't say trading's easy. I said that there's easier trades to make, not trading the flavor of the day, the one that's flipping, the shiny object, the one that's going crazy. That's going to bring the most outlier, losses. This week, obviously, CXAI pre-market, I think the only people that got smoked on that thing are the ones that, held it over, obviously. But intraday, during the day, signs were there. And we'll revisit that in a second. But once again, it's a great example of having that max stop. And max stop should be maybe 2-3 days of P&L, something that, yeah, you're annoyed. But are you thinking about it on your next trade, or are you just back to business as usual? And as long as you can just, boom, back to business as usual, that number's right. If you're like, oh my gosh, I don't know how I can come back from this. I can't believe I had such a setback. That number's too high, right? So take that away from you. Take that ability for you to get reckless away for events like this, CXAI and all that. That's what separated me in 2020. The second part of it. The first part, I was choppy all over the place and had a lot of, outlier losses, a lot of crazy outlier wins. But, could I have prevented some of that downside if I had just been having that maxed up? So that's what I implemented after, some of the AMC type stuff that we had talked about. Back then I went over, I had my next shirt on, and it was, how am I going to reset on Monday to come back from my stupidity this week? We had a bunch of those videos during, that period. So just think about that. Let's see. Shorts will be short. So they're gonna always be shorts in there. They will. this doesn't make sense. This is an obvious short. They need money, this and that. So there's always going to be that kind of group. But the thing is longs in this market right now need to be convinced to sell, right? It's not as obvious before. Everybody wants to hold it. They are price, like the back and forth, the price fluctuations, they are, not influenced by them because 50 cents doesn't matter when they're going to sell at $69, right? So that chasing versus chasing candles, there's just be cautious. Be cautious just jumping on anything. There's a lot of stocks that hit scanners this week, and a lot of them worked. If you chase that first swipe, you might have emotionally sold, and then as you saw, most of them all came back. So on these thin ones, if they're going to lay a trap, it has to ramp up, come back, start to churn, create some shares, right? Get people like, oh, there's no reason for this to be up. I'm going to short. They start to buy the float back via the shorts, and then we have those secondary moves. And that's exactly what happens over and over and over again. And then dip and rip candles. Those tell the stories right now. When you see that dip in the rip, if you haven't adjusted, if you haven't sized down, you've got a small period of time. Because the only way that a dip and a rip candle gets voided, basically turns the sentiment, is when you have either a blowout move, stuff, failed follow through. Right? There's only two things that are going to cause my kind of bias to change. After I see that dip and rip candle, I'm assuming that slow and steady, annoying grind that keeps you in, keeps most shorts in, I'm assuming that's happening next. And until we get that blowout where it just, there's either a price move that's crazy or just a huge volume, goes off into the offer and then it just stays heavy and starts to pull back under prior support. That, or it just slowly fades off by itself. Those are the only two ways that I'm interested in fading the trade at that point. Otherwise, hands off. And right now, as you saw with CXAI, PTPI, and CNSP, the stuff moves, slams down, they get soaked. And if you look left, it's getting soaked at the same spot. So we get excited about this huge, stuff slammed right back to where it was 3 minutes ago. And meanwhile, we're like, all right, it's over, hammer in. And then guess what? Holds on, swipes, because everybody's anticipating the fade. So be aware of that. That is the most important thing right now, is the dip and rip and stuff's getting soaked. And it's been getting soaked and soaked and soaked. And like I said, last thing that I was going to go over, CXAI, PTPI, and CNSP. And so all very good. This is the power of, been doing this 18 years, 19 years, seeing it over and over, being on the wrong side over and over. And so for those of you guys that were in IU, you saw identifying the trap on CXAI and hands off at 450. After that last time it should have died and it firmed up. It was the same trap that we saw on Lucy. It was the same price action we saw on AI, right? Where it ramps up, sits back, ramps up, sits back. But it never breaches a prior low. And the only time that they walk it down, there's been no swipe attempts, right? So on CXAI, we were talking about it in the lounge where it had broken trend and it was just slow and steady fade, but it never really actually tested back up. So is that just them letting shorts dig their own grave, right? Is it sellers, or did they already buy the entire float and they're just letting shorts slowly dig their own grave, swipe back up, consolidate, hold. Now everybody's shorting every pop, slowly and steadily force them out, right? And so then we saw the same thing, PTPI with the 550s. So it's fine if you're trading it, but if you're not proactively covering, you're asking for it. And then last but not least, CNSP was the most recent. And, there was a great trade opportunity, 170s down to I think the teens actually, 115, 120 range. came back up, stuffed, faded again, but it oddly held at 140. And if you look back, I think till 11 a.m., 140 was kind of a key level. So I posted in the room. It's Friday, hands off, 140 obviously soaked. That's your level. I'm looking for a 170 exhaustion move, but I have no interest until it peaks out. If you try to find the front side and it goes into the circuit, what are you going to do? And that's exactly what happened. So being able to identify that, see that, like I said, I've got 18, 19 years of, you know, being on the wrong side of the name and seeing that stuff. So hopefully, if you were in the room this week, you were able to see that in real time on those three names, which were, pretty much the disaster names. But other than that, be patient out there. Let everything shift. When you have 200, 300, 500% moves, you don't have to get the top, right? Let it do its thing. There's going to be so much left after. Everybody's on the same side, so it takes so long to actually break down. And then once it breaks down, everybody's exhausted. It's your job not to get exhausted on the front side and not to forget about it on the back side. So that's it. Let's get right into scan for the week ahead. All right, guys. So for the second part of scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So if you're not okay with that, shut the video off. If you're good with that, you want to learn good edge, good type setups, what's working, what's not, what I'm trading, what I'm looking to trade, you're in the right spot. But let's get right into the week ahead. So main watches. First and foremost, IMPX. I think this is going to be a great trade. I've been having really good success with the 30 to 60 to 90 cent names. It's been a little frustrating because you always get the 20, 30% gap down the next day, and I'm not holding them over, unfortunately. But I would like to see some sort of morning shove. I'd love to see CXAI kind of push up again. I do think, based on the volume alone, it's possible, unless they do a raise or something like that. It is possible, though, just based on the volume and the float itself. It's just, I kind of feel like it will stick around for a little bit longer before just dying off, but who knows? So that said, if we get a gap up on CXAI, I think IMPX will be gapping up, and I'll have no choice but to kind of follow suit. So I'm going to come in with a plan on IMPX, but if CXAI disagrees and it just starts going the moon again, obviously you got to throw away that thought process because it's connected, right? They have X amount of shares or whatever, so everybody's, trading this one. Wild move, great opportunity on Friday. Got the nice short off there into the exhaustion move, the parabolic stuff. Nice steady fade, but it did hold pretty well in the 80s. It almost filled the gap. So what I'll be looking for is some sort of morning shove, ideally, dollar plus, and then fail to follow through. My thought is it's going to open 78 cents to 82 cents, somewhere in there. 10% gap down, something like that, and then just kind of fade off. If so, then that's fine. I'll still be there. One thing about that, if it gaps down, a lot of you guys and ladies will take it off radar, right? I missed the trade. But your idea, or in this case, my idea in the sense, right, is if it opens at 90s, 95s, pushes out, I'd be looking for it to fade, gap fill back under 70s, maybe down to 55, 60 cents, right? So if it gaps down to 78 cents, a lot of people will just throw it off radar. However, you still have 20 cents on your game plan, right? So most people take it off radar. I want to keep it on radar because it's doing what you expect. It's doing the fade. Most people always want to focus on the stronger names because they think there's going to be more, more action, more meat left. But a lot of times the stronger names are the ones that are going to give you the headache. So I like to focus on the ones that are agreeable with what your thesis is. Next up, CNSP. I think that I think this was just a kind of like a CXAI kind of thing. They see it popping up after hours. Oh my gosh, I got to get long. It just went from 3 to 4. It's going to be 10 on Monday. But the reality is it traded 50 million shares. It's a thin float. it could open up at 5, 6, 7. We don't know. So I'd be prepared for something wild, but I do think that it's going to be back under $1.50 and then some on Monday or Tuesday. So again, I'm going to go in with a short bias. I'm going to go in looking for higher stuff move, failed follow through, you name it. But if it agrees, I'm going for it. If it doesn't and it starts to hold and it gets trappy, then hands off. Let everybody else try to do it. Let them exhaust. It's your job not to pre-exhaust and wait. Next up, failed follow-through section. NIR. Perfect end-of-day move. I got about $2 a share and then some. I sold the majority of it. Again, everybody's mindset will be, this is the next one going, right? So this looks just like, say, CXAI on the daily. Looks just like SMX, just like the de-SPAC stuff that I was talking about to start this video. So, yes, it could continue to go. But if it's going to go from 4 to 6 inside of 30 minutes, I'm selling at least a majority of my position, or at least half. If you want to let the rest go, by all means. But on any of these thin ones, if it immediately rips and goes crazy within 30 minutes, when I'm thinking like big picture, I'm buying thinking for next week, and then it goes nuts into the close. The stronger it is into the close, the more I want to sell. It's just the way it is. And, if I miss out, I missed out. It is what it is. SAI. Higher the better. Hopefully opens up 556 and then fades off. We'll see. But I do think that this is going to be one of the types that you see straight back under 3. So again, watch your sizes. You have to prepare for random swipes. It's difficult to trade these, and that's why I'd rather trade more of them with less size, so that if God forbid it swipes up, it's like it's not the end of the world. But if you were just focused on that one and then it just has this random swipe, it could really dictate how the rest of your day goes or week. PTPI, same deal. I have this on failed follow through. I do think it's going to gap down, but I want to be very, very aware on Tuesday and Wednesday, T+2, that if there's a lot of failure to delivers, then there's a good chance that it could have a secondary move. So I want to be prepared for that. NVAX, NVAX, I'm watching just over and under. I want to set a price alert for 9. I feel like the day that it hits 9, it'll probably go 850s, 830s, something like that. Nothing that I think that has to fade. So that doesn't mean that I'm jumping in front and then, it goes 10, 11, 12, I'm still short. No, I want to be part of the profit taking, part of the failed follow through. Next couple, SMX and ADAI. SMX, hopefully we get some sort of push back up, maybe 30 to 50 cents, and then starts to fade off. I could see this coming back down into the mid ones, as long as 2 acts as resistance, failed follow through, so on and so forth. ADAI, you guys already know. So again, you can see the move was 2 to 6. It was 8 pre-market. Obvious race. It was obvious that they needed to race. What's the risk? They withdraw. They don't do it on your timetable. And so the risk of just shorting that is great, stepping in front of it. And like I said, I think pretty much that move 2 to 4, that was maybe people anticipating it getting squeezed. And then you have the new group of, this is an obvious stock that needs to raise. Then they get popped till 8. And if they didn't stop out, then they broke even on the trade. So, it is what it is. But I'm thinking that this fades back sub 3s in the near term. Next up, continuation side. I only got a couple. And honestly, I'm not really that excited. IONM, I have a small position long. I sold some of it after hours. I had bought, dips on this thing on Friday. That was an idea. Early on, low volume, nothing I'm excited about, but it fits what people want right now. Note, really nice. This is sort of that daily liquidity trap that I talk about. You've got that first 40 million share day, consolidates, and then slow and steady grind up. Now we're either going to rocket through, I think it was 283. we're either going to rocket through that 283 level and slam back down, or we're going to start to firm up and have that secondary squeeze. So yes, it looks like a breakout. Am I set on it going crazy? Not necessarily. So there could be that 280 clear out and fade, or base and starts to grind. I want to be prepared for both. HTGM, nice so far. I have about a third left or so, just in case. They have that forward-looking catalyst, and nothing that it's just a presentation and stuff. But as you know, everything is a catalyst these days. BGXX, still have not traded it long, but it's been on scan for 2 weeks now. It's now 50% move. OBLG as well. I don't have any of this left, but nice breakout there. So I'd be watching just in case it starts to continue on and trap 250s and go to something like 4. If not, then looking to fade it. So the continuation side, nothing I'm too crazy excited about. I don't really have too many swings on at the moment. I had a bunch during the week. Worked really, really well. Sold everything really, 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 really too soon. But that's trading, right? So anyway, that's what I'm looking for ahead. Again, I only got 2 main watches, and that was what, CNSP and INXP. So those ones are going to be the sort of the focus names for me. I think that those fit my personality the best. You still have action on Myra and Riot and Neo and those daily kind of drivers. You've still got some great stuff on all the tech. There's lots of range out there. So it really just depends on who you are as a trader. But be careful on these small caps, and be careful thinking that you're going to nail the next CXAI on every single trade. That is, everybody's got a one-track mind right now. Every long they take that's low float, they are thinking that it's going to go to 69, just like CXAI, right? So think about that before you step in front of something. Be cautious of traps. Right now, there's less sellers. Most people are holding. So sellers potentially are just shorts. And if that's the case, it's just about churning, and getting those trigger points, those pressure points where they know they have them backed into a corner and make them pay. So again, that's it. Be patient in this market. This week, I've got Traders for a Cause in New York City, the poker tournament. So I look forward to seeing some of you guys there. I know a lot of people are going. And that's it. Have a good rest of the weekend, and we will see you in the room on Monday.